Will 2017 be a difficult year for gold? Joining me now at the PDAC on the sidelines here, Jeff Christian, Managing Director for CPM Group. Jeff, welcome back.
Good to be here.
This time we're talking gold.
Okay.
And what is your sentiment? Are you happy with the current state of the gold price right now?
I am happy with it. It's a little bit stronger than I thought it would be. We thought it would be kind of weak in the first half and then strengthened in the second half. But I think the turmoil that you're seeing in Washington is causing gold prices to stay higher than we had expected already, which I think means that you just have that much more of a base to build higher prices later.
Now, last time we spoke, Jeff, which was, I want to say December, we were talking about the rally in U.S. equities, and you said they were on a sugar high. Now, here we are in March, still very high. Do you expect this to continue?
It is a sugar high. It continues to be a sugar high. We expect it to continue. We had thought that it would top out around May, and frankly, it might top out around May. But given the slower pace of developments in Washington from what we had expected, quite frankly, the stock market may hang up until September, October. We do think at some point the stock market's going to come off sharply, probably September, October. Every major bear market in the stock market has occurred in October, but the adage of sell in May and go away may also apply. So we may see the stock market top off over the next 3 months, not necessarily fall sharply, but move sideways in a volatile.
Now, long term, beyond 2017, you are more bullish for gold.
Yes.
Okay, against which backdrop?
Our expectation is that gold prices reach a nominal record high by 2020, 2022. So 3 to 5 years from now, we think gold prices will be at record levels on an annual average basis. The reason for that is primarily investment demand. Investment demand being stimulated not only by problems in Washington, but problems around the world with Europe. North Korea is an aside, but Europe, Russia, the United States. There are major economic and political problems which will stimulate investment demand. Central banks will continue to buy a lot of gold, and mine production is probably going to peak around 2018, 2019 and start falling sharply. So you have reduced new supply as investors and central banks buy more gold.
Finally, on that note, mining, we are at the world's largest mining conference, the PDAC. Is the sentiment you feel for gold as a metal, does that translate into the mining stocks as well? Do you have the same forecast?
It's a lot more rifle shot with mining companies, but yes, we expect the mining industry and the gold equities to do well. But with the gold equities, you have to look at management and a variety of mining risks that don't exist with bullion. So when we look at the mining shares, we're much more selective in who we like and who we don't like. That said, we were shocked last year that the rising tide raised all of the boats, and there were some companies that really ought not to have participated in the bull rally last year, but they did anyway.
Jeff Christian, thank you so much. Best of luck here at the conference.
Thank you.
And thanks for watching our coverage. We'll have more for you, Kitco.com. Thanks, Jeff.